India's electronics industry experienced remarkable growth in exports, particularly in the mobile phone segment. Now, a lot of the rise in the exports is being attributed to the PLI scheme for mobile phones, which is also being touted as the most successful of them all. Now, while the scheme indeed has drawn a lot of attention from key manufacturers globally, in the industry, we analyze the factors behind the rising phone exports from India and look at what can be done better. Now, while we talk about that, we also look at the government's ambitious National Asset Monetization Pipeline, which is a strategic initiative by the Indian government to unlock the value of underutilized or non-core public sector assets and monetize them for generating revenue. In this episode, we try to understand how the scheme has been faring since its launch in August 2021 and how the government is benefiting for it. You watching Informed Investor, the Third Empire, an initiative by Research and Ranking. Let's begin. Now, India's electronics industry saw record-breaking exports of electronic goods with a 50% rise compared to the previous year. But the highlight of this was the mobile phone exports, which have crossed the whopping $11 billion or approximately the 90,000 crores mark in FY 2023, which is double to the 45,000 crore worth of mobile phone exports in the previous year. Now, while we compare this to the 5 years ago period, the growth is almost 37 times as India recorded only a mere $300 million worth of exports back then. So what really led to this massive rise in exports worth $11 billion from a country that was heavily dependent on the imports, and what is the true reality behind this? Now, before we start, let's try to understand from the very beginning. Back in 2016, the government had raised tariffs on imported mobile phone parts, and in April 2018, it had imposed a 20% tariff on importing an entire mobile phone. Now, the goal then was to have more production of mobile phones within the country. Now, fast forward to 2020, the introduction of the Production Linked Incentive Scheme or the PLI scheme worked as a catalyst for the growth in exports, which we are witnessing today. Now, the PLI scheme worked in a way that the government incentivizes the manufacturers in India, where Indian or foreign owned, a sum of 6% of the phone's invoice price for every year, and it eventually trickles down to 4% in the fifth year for every incremental unit that is produced within India. Now, in addition to this, state governments also offer tax incentives, power and land subsidies for setting up units within their respective states. Now, soon after this announcement, domestic and international firms flocked to get these incentives. Some big names were the likes of Foxconn, Apple, Samsung, Micromax, Lava, etc., who were promised incentives if they met their production targets. Now, companies were riding this wave, and India's overall smartphone exports crossed the $11 billion mark for the first time in a financial year. Now, out of this $11 billion, Apple is leading the race with exports of more than $5 billion, followed by Samsung at the $3.54 billion mark. Now, on a yearly basis, Apple's exports grew by almost 4 times as they ramped up their manufacturing operations within the country. Now, this massive rise in mobile phone exports can be credited to the PLI scheme, which also happens to be the most successful schemes of them all, which has boosted the mobile phone manufacturing industry within the country. But is this the reality? Now, let's critically look at this. Now, there's no doubt that the exports for mobile phones have increased massively, but at the same time, the import of raw materials of critical components like semiconductors, circuit boards, displays, and cameras too have increased at the same rate. Now, one of the key deficiencies of the PLI scheme is that the subsidy is based only for finishing the phone in India, not on how much value is added by the manufacturers in India. Now, this implies that very little apart from assembling is done in India, though manufacturers plan for a lot more in the future. Now, this was even called out by our former RBI governor, Dr. Raghuram Rajan. Now, let's look at an example here to understand this better. According to Bank of America's research, in the case of Apple specifically, 70% of iPhone's cost comes from the memory, processor, display, and camera module, and these have to be imported. So, localizing further for Apple in the case of iPhones may take longer than the PLI deadline. Now, take a look at the chart on your screen now. The red line indicates the import of finished mobile phones, which started dropping soon after the imposition of tariffs in 2018, while the exports of mobile phones, indicated by the blue line, started rising. Now, this implies that the net exports of mobile phones, which are the finished mobile phones, started booming 5 months after the imposition of the 20% tariffs in April 2018. Now, this chart alone can't explain how we can build a domestic capacity to produce massively and export in just 5 months. Now, this chart explains the mere fact that companies resorted to importing completely knocked down units, which are smaller parts, and then assembled them in India rather than importing the finished phones. Now, this is indicated in the chart on your screen, where during the same period, the imports of critical components of mobile manufacturers like semiconductors, PCBAs, displays, cameras, and batteries saw a significant rise, and in FY23, it recorded $32.4 billion worth of imports. Now, when we combine both the charts of net exports of final mobile phones and the imports of the critical components to see the change in value added, the combined net exports fell from under $12.7 billion in FY27 to $21.3 billion in FY2023. Now, this gives a conclusion that we've become more dependent on the imports, albeit of the critical components now, during the tenure of the PLI scheme. Now, one can always argue that these components can be imported for other electronic manufacturers and other industries as well, like the TVs, video cameras, cars, etc. Well, true. But with the data available, it is still hard to tell whether India is paying out more in subsidies and tax waivers to mobile manufacturers who only bring in the assembly to India than the actual value that they add in India, since the value added from the assembly is only a small fraction of the total value of a mobile phone. Now, even if the PLI has not been very effective so far, India has attracted huge names with the likes of an Apple and a Samsung to India. While the goal for these companies is to reduce their dependence and concentration from China, India is undoubtedly the beneficiary here. So the PLI scheme is indeed attracting some big names. Even several Chinese companies have been given clearances from the Indian government to partner up with the local companies to ramp up manufacturing facilities within the country. Now, the government also clearly stated that the Chinese firms would not be allowed to set up wholly owned entities within the country. The government's plan, nevertheless, is to first globalize and then localize, and it is slowly building the pipeline to be a manufacturing hub. The government also mentioned that the DVA, which is the domestic value addition, hit an average of 15 to 20%, which it plans to scale up to 35 to 40% by the end of FY26, which is also incidentally the last year of the PLI scheme. So to conclude, while the export of mobile phones data alone does not give us complete clarity, the PLI scheme alone, with other financial incentives and programs, could offer a massive boost to mobile phone manufacturing in the days to come, provided the government concentrates on the value added within the country rather than just finishing the phone in India. Now, the government had taken another important economic measure called the National Asset Monetization Pipeline. In contrast to privatization, where state-owned companies are sold to private businesses, or in contrast to disinvestment, which involves selling shares of public sector units to non-government entities, the National Asset Monetization Pipeline has a different objective. It can be likened to a strategic game played by the government aiming to unlock the concealed value of the assets that it owns. Let's understand this better. But first, let's look at what is monetization. Now, monetization involves the government transferring the rights to generate revenue from public assets that are not being fully utilized or are unused to the private entities for a specific period. Now, in exchange for upfront funds from the private entity, a share of generated revenue, and a commitment to invest in the assets, the government delegates the operational responsibilities and the revenue rights of the asset to the private operator. Now, this arrangement applies to various assets such as roads, power transmission lines, stadiums, warehouses, and more. And as a result, the government receives a significant upfront payment which can be used to invest in other infrastructure projects, essentially unlocking the value of existing initiatives and redirecting the funds towards newer and better development. Now, picture this: India's vast treasure trove of assets ranging from airports, railway lines, highways, power plants, stadiums, and even lighthouses Imagine the government meticulously analyzes and identifies these assets, determines which ones can be monetized to generate revenue for the country's development, and actually implements it. Now, the goal of the asset monetization is to unlock the value of government investments in public assets. Now, this can be achieved by involving the private sector, which can bring in the capital and the efficiency to do it. By doing so, the government can generate additional income for the company and its shareholders. Furthermore, it helps in accurately estimating the value of public assets, leading to better financial management of the government resources. Ultimately, this can be used to fund the infrastructure development within the country. Now, it's like unleashing the economic power of these assets, allowing them to work their magic and contribute to the growth of the nation. Now, in an ideal world, this allows the government to build an ambitious infrastructure plan without adding to the existing government debt. Now, the goal is to create employment opportunities and to meet the ever increasing need for improved quality of public assets and services as well. Now, what has been the track record? The government's track record in achieving the monetization target has been a bit uneven. The government collected approximately rupees 97,693 crores through the asset monetization in the first year of its implementation in FY 2022. In the last fiscal of FY 23, the government aimed to monetize assets worth 1.62 lakh crores, but it could only achieve 1.32 lakh crores. Some key ministries like the railways, road transport, power and telecom struggled to meet their respective targets. Now, why did the government miss their targets at all? The implementation of the monetization plan under the National Asset Monetization Pipeline has proven to be complex and a challenging task. Now, despite its promising potential, certain ministries have encountered obstacles along the way, impeding the scheme's full realization. Now, this has resulted in a turbulent couple of years for both the government and the industry involved in the process. Now, one of the primary challenges faced by the ministries is the uncertain market sentiment. Economic conditions and investor confidence can significantly impact the monetization of the public assets. Now, fluctuations in the market, such as the change in interest rates, the global trade tensions, or geopolitical instability, can create an unfavorable environment for asset monetization. These external factors have added an additional layer of complexity and unpredictability to the implementation process. Another factor contributing to the challenges is the impending general elections. Political campaigns and the associated focus on the electoral priorities often divert the attention and resources away from policy implementation. Additionally, the emotional intensity surrounding the issue can be attributed to the perceived erosion of the national assets. Now, state-owned assets are often associated with a sense of national pride, sovereignty, and collective ownership. Now, the idea of transferring these assets to private hands may be seen as a betrayal of the public trust or an erosion of the state's role in serving public interests. Now, the asset monetization policy of India is a very ambitious policy for the infrastructure sector to mobilize investments. But last year, the government slightly fell off its target. Now, as global challenges gradually ease in the coming years, the government might be able to refocus its efforts on the timely and efficient implementation of the National Asset Monetization Pipeline. Now, this renewed focus could unlock the true potential of asset monetization, benefiting both the government as well as the private sector. Now, if you want to know more, we've discussed about why disinvestment has become so relevant, as well as the general Indian sentiment towards privatization and disinvestment in our Third Empire episode dated 8th May 2022. Additionally, we've also discussed the National Monetization Pipeline and how it can be implemented successfully in our Third Empire videos. We urge you to revisit both these episodes for better insights. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.